Alrighty, so today I'm going to be giving a few tips on how to spot market sell-off as it's beginning, and how to spot it and how to hedge against it. So overall today, SPY was bullish coming into the day. We had gapped up from the other day. We had a nice bull flag, and we were consolidating up here in this range up here around 325 to 328. And in the beginning of the day, we were trading bullish trades. We were trading things like, let's see, Roku. And basically, we were saying that SPY is bullish as long as SPY is closing hourly above this pivot of 325.85, and that represents the gap from the day prior. And so basically, we traded Roku intraday, and we just caught this nice bull flag move and push up for a quick gain. And then later, I entered a AMD trade, and it actually didn't work out. We were getting ready to break up on AMD, and basically, it just started to roll over, and it broke the bull flag. And basically, SPY was starting to sell off. But I had up the hour chart, and I was like, okay, the first 2 hours of the day, we're still bullish. We're closing up hourly above 325.85. But then we started forming a bear flag pattern on the hourly chart on SPY. And then this candle right here, right at about 9-10 a.m., we started to close hourly below 325.85. So I cut my AMD position and started looking at different hedges, and things that you can use to hedge are SPXS. And so basically, the QQQ, the NASDAQ, was seeing a lot of profit taking today. This is what mostly is dragging down SPY right now. This is live as I'm talking. But basically, the QQQ is dragging down SPY. However, IWM, which represents the small caps, the market kind of moves as like a whole, and sometimes things push and pull. IWM was bullish on the day and was pushing up. So SPY was being held within this range. And then also a big part of SPY is the financials, the XLF. And so the XLF was also pushing up with the IWM. And so that was keeping SPY in that consolidation range. But then things started to get hairy. I think some virus news came out, and that really accelerated the selling, and the volume started to really pick up. And then what we noticed on SPY was, okay, we held 325 support. That's good. Not super bullish because we're below 325.85, the gap. And then look, we rallied right to the gap. And then look, we put in a tail candle and rejected. That's what a rejection looks like. However, right here, we put in a higher low. So we had the chance to break 325.85 and resume upward. However, we didn't. We actually rolled over. This had the opportunity. It was forming some sort of bull flag, but look, bull flags can fail. Bull flag broke down, and look, we came down to 325 again, and 325 on the second time around will likely not be support. So 325 buttered through. They sold through 325, and then look, did a kickback rally called a bear pullback, and basically SPY rallied back to 325 and rejected. It was rejected when this fat red candle came in and broke this prior low. And that's when I started really paying attention to SPXS, which is an inverse ETF that goes up when SPY goes down. And so basically we're kind of scaling into this, and just as a kind of a hedge, nice and low risk. I like how it's a low share count, and that way you don't really have as much decay. So if you start noticing that SPY is closing hourly and below important pivots, and the market is starting to roll over, there's some bad news, the first thing you can do is you can buy puts. However, those are expensive because as the VIX goes up, which is the volatility and fear index, as the VIX goes up, option premiums start inflating really high. And so you could end up paying a lot of money for your options. And even if SPY does drop, you paid so much for it that you're barely going to make anything off of it. And if SPY rallies, the VIX will come down and you'll get destroyed. So buying puts are expensive. You need to be in puts before the crash is happening, or correction in this case. This is just a correction, not a crash. We'll talk about potential scenarios for SPY moving forward. But you can buy puts. You can buy put spreads. I have videos on spreads. Those are okay, but you can also catch decay. And so what I like to do is buy a VIX call. And a VIX call tends to grow exponentially. We're up like just a little bit on this VIX call right here. But the VIX call, these will start getting super exponential as the VIX, because the VIX, once there's a market sell-off, the fear is growing in the market. People are selling their shares, they're swiping sell, and that causes this to skyrocket. So you can do VIX calls, or you can do inverse ETS. SPXS is the inverse of SPY. SQQQ is the inverse of the tech. And you can do things like short the Dow and stuff like that. So that's basically how we're kind of hedging and protecting ourselves so that we don't kind of feel the full beatdown of this sell-off. And right now we're forming a bear flag, which is really not good for SPY. But we're going to talk about basically how SPY closes the day is going to be very important. So the daily close kind of gives insight to probabilities of what's going to happen the next day or next few days. So if SPY closes the day below 323.50, which it is below right now, that is bearish. That's slightly bad, probably about a 60 to 65% chance of a gap down tomorrow. Or if we don't gap tomorrow, we'll sell off tomorrow. If SPY closes the day between 323.50 and 325, so that represents this range right here, it's neutral. You don't really have an edge. It's not bullish. It's not bearish. It's a 50-50 coin toss. So we don't really like those 50-50 coin tosses, but that is a potential scenario for the end of the day. And then if SPY closes the day above 325, it's actually bullish. As weird as that sounds, that would make the daily candle look like a wick, one big wick on the daily candle, and this bull flag would still be intact. We'd still be above this prior high, this breakdown candle high. So that's important. So it's slightly bullish if SPY closes the day above 325. If SPY closes the day above our gap, the 325.85, that's way up here. That represents this blue line. If we close the day up there, that's actually mega bullish, and the bull flag is strongly intact. And there's an 80% chance plus of a gap up and a huge rally, especially since there's probably a lot of people shorting this right now, and that will be underwater, and that will create a huge squeeze up. That is less likely, especially where we are with only 40 minutes left in the day, but that is a potential scenario. And then lastly, if we close the day below 319, that is super bearish, and we could see a big gap down. 319 is about right here. That could put us back inside this bull flag range, and we could see SPY 312, SPY 310. It would be unlikely to make a lower low from that point, and we'll assess the situation as that goes. But hopefully you have those levels down. Keep an eye out for the market, how it closes the day. And another thing to note, that something like SPXS, you can buy after hours up until 5 p.m. So if you want, you can buy some more shares. Say SPY closes the day below 323.50. You could nibble some shares, maybe however much risk you want. And then I only have 51 shares, which actually is not a lot. And then I will add to this if SPY closes the day below 323.50, and I'll add even more. I might even buy another VIX call if we close the day below 319, which is quite a ways away. That is less likely to happen. So small chance of a gap down the way the market is trading right now. We do have a bear flag, so keep an eye out for that. The bear flag would be negated if we got above 323.50. Then your stocks are just fine. Long term, SPY is still in an uptrend, so be sure to try not to sell your shares. Not financial advice, but it is. There's a higher probability that your shares are just fine in the long run. So hold on to those shares. That's why we put on hedges, so we don't have to sell our shares. We can just have the hedge. And if the hedge doesn't work out, that's okay. You just didn't make money. You didn't lose money. But if the hedge works, you're going to be glad you had it, and it'll net you some good profit if it can get going. So watch out for that bear flag. Bear flag negated above 323.50. Neutral in between these zones. Keep an eye out for all the sectors. The QQQ, the IWM, the XLF. All those are components of SPY, and how those move is going to determine how SPY might move. So keep an eye out for this bear flag. These generally play out to the downside. So this sell-off caught probably a lot of people by surprise, but that's why if it were easy, everybody would just be making money in the market. The the market would continually go up indefinitely. The stocks are breathing right now. It's going through a cleansing state, minor correction. It is not a crash, as some people might say. It's only down 1.21%. So let me know if you like this video or dislike this video. That's my feedback indicator. Let me know if you want me to break down any other stocks or ETFs. And yeah, thanks for tuning in. See ya.